Hey everybody, what is going on with GameStop? You may notice that the price is cut into fourths. You may wonder, is it a good time to buy? Should I sell? Should I get out of this thing? What is the future of GameStop? We're going to talk about it in this video. Let's go. Hello everybody. It is Jeremy Whaley from Trade Maestro. Hope you're doing fantastic today. If you've not signed up over at trademaestro.com, get over there and sign yourself up for something so you can get on our mailing list, or at the very least subscribe here on the YouTube channel if you've not done that yet, so you can get all of these alerts and everything for all these great videos that we put up. Today I want to talk about GameStop. It's not a company that I normally spend a lot of time talking about, but we started talking about it a year and a half, 2 years ago, when there was a bunch of activity around it, and you guys probably remember all the chaos around the hedge funds that were shorting it, and the internet groups getting together and saying we're not going to sell our shares and whatnot. Well, it really has thrust GameStop into the conversation, and I don't know that it's worth the conversation or not, but it doesn't really matter. I mean, that's the market, right? It doesn't matter what the numbers say on paper. What matters is what the traders say, and the traders have made it something that is significant, and so much so that we're actually looking at a stock split, which if you had told me 2 years ago we'd be sitting here in July 2022 looking for a stock split on GameStop, I would have called you crazy, but I've called people other stuff. So anyway, I want to talk a little bit about that. What does a stock split mean? Maybe you're watching this before the split. Maybe you're watching this the day after or a couple days after. You open up your account or you just do a search for the pricing and you're like, oh my goodness, it's cutting fourths. What's going on here? So let's talk about that. Let's get over here to our charts. And what you're going to see here is you're going to see my GameStop chart with a couple moving averages on it and a stochastics across the bottom. And what I want to draw to your attention, this is going to happen tomorrow. So it's actually, I'm recording this on July 21st, and this stock split is scheduled to happen, I believe it's tonight after the market closes. It could be tomorrow morning before the market opens. It just says here, July 22nd of 2022. And you notice that it says it is a 4-to-1 stock split. Okay, 4-to-1. What does that mean? Well, what it means, if you're not familiar with a stock split, it means that if you own one share of GameStop, tomorrow the price is going to get cut by a factor of 4. Pack it up and go home. You're done. No, I'm just kidding. The price is going to get cut by a factor of 4. However, instead of having one share, you're going to have 4 shares. That's what a split is. So what a split is basically they take the shares that are outstanding and they divide them by a factor, and it cuts the price in half if it's a factor of 2, cuts it by thirds if it's a factor of 3, if it's a factor of 4, it cuts it by fourths, and so on. Most people, if you look at I'll call them the traditional professionals. Most people consider a stock split a non-event. Traders, we do not tend to consider it a non-event because normally good things come out of stock splits. So I want to talk about that just a little bit here. I figure you're probably, if you've been trading GameStop, if you've been tracking with it, you've probably been wondering, what's the future? Is there a good upside to it? So let's talk a little bit about what happens with stock splits. We'll start off here. Let's just kind of talk about the GameStop piece. And, here's what you can expect tomorrow. So the current price for GameStop is, got to get my glasses back on because I can't see. It's about $153 a share. So you'll have 153 divided by 4, essentially. And that's what we'll open up at tomorrow. So tomorrow, let's take 153 and divide it by 4. And that's going to be $38.25. So tomorrow, when you open this thing up, now you might be looking at this video tomorrow, so you may have opened it up today, but whenever it is, it's going to be way down here. And you're going to start seeing candlesticks down here, and you're probably going to see some that go down a little bit, and you'll probably freak out a little bit, then you see some that go up, and it'll probably, try to stabilize down in this new price range. So that's what you can expect. That's the immediate short-term impacts of what's going to happen with GameStop. Now, let's talk about the equity side of this, because a lot of people, they have this idea that if the price has been cut, that it's a really bad thing, especially in social media. Now, I'm sure if you're watching this, you're a more educated investor, but a lot of people in social media, they don't know. They see a price and they're like, oh yeah, it's horrible. It's down at $38. What this really is it's just a breaking up of the equity. That's all it is. And so if you have, I'll use a round number. Let's say you had $160 in the trade, or actually let's use a bigger number. Let's say you had $1,000. So you'd have $1,000 worth of equity in a company like GameStop, and then they divide it by 4, you still have $1,000 worth of equity. It's just that instead of having $1,000 worth of stock at $153 a share, you now have $1,000 worth of stock at $38 a share. Same amount of equity. That's why fund managers over these years have referred to a stock split as a non-event, because it doesn't really change your equity position. But here's why traders refer to it as an event. And the best way I can do this is probably to get us back to another recent split. And the one that comes to mind is Tesla. I know there's a lot more, but this is the one that comes to mind. And let me get rid of all my lines and stuff on here. So if we go back in time, we jump in a little time machine and we go back to the year 2020. Right here where my cursor is on the screen, you see a little orange dot down here in Trading View, and it has a little S in it. That's for stock split. And if you look here, you'll notice that this split was on August 31st, 2020, and it was a 5-for-1 split. Okay, so what happened? What happened at that time is the price of Tesla divided by 5. And then that is now the new price basis for Tesla. So if you had 1,000 shares of Tesla, at that time it was around $2,500 a share. Okay, so if you had 1,000 shares or 100 shares, we'll say, at $2,500 a share, after the stock split, you now had 500 shares at $500 a share. Make sense? That's the way that a stock split works. Same amount of equity, it just gets divided at a different cost basis. And now you have, in this case, 5 times as many shares. In the case of GameStop, it'd be 4 times as many shares. But let's look at a couple more important things. Rather than just the function of the stock split, let's look at a couple of things that typically happen around a stock split. So I'm going to kind of zoom in here so you can hopefully see this pretty well. I know sometimes on YouTube the candles and stuff get lost, but here's your stock split. Notice what happened running into that stock split. Now, unfortunately, unless I just haven't figured it out, I don't think there's a mechanism in TradingView to show a pre-split price. Other charting softwares that I've used have had that mechanism. I've never found it in TradingView. So maybe if you know where that mechanism is in TradingView, you could leave it in the comments. You can help me out there. But, essentially, just go back to right here. We'll call it August 10th. It was roughly August 10th where I just circled on the chart here. At that time, Tesla was trading, according to this chart, at $300. But we know that is actually a post-split price. It was really $1,500, okay? And between that date and the split date, Tesla had a huge rally going into the split. This rally accounted for a move up to about $2,500. I'm going from memory here, but it was about $2,500, and that checks out because right in here it was $500 a share, and we go 5 times that. Okay, so you had a move from $300 to $500. Before the split price, it was $1,500 to $2,500. Okay, that is a large percentage of move. Let's just do some quick math here, and you're going to see that $2,500 minus $1,500, that's $1,000. So $1,000 divided by 1,500, that was a 66% move. Okay, now just for some additional quick math, the difference in 500 and 300 is 200, right? So the post-split, that's $200 gain divided by 300 is 66%. So you see it's exact same. Percentage-wise, nothing changed here. It's just the dollar amount, the basis for that share price. And what this did for Tesla is it made Tesla go from a $2,500 share stock down to a $300 and then ultimately $500 share stock, making it more affordable. Okay. Very often, very, very often, this is what I want to talk about as far as the stock split is concerned. More often than not, whenever a stock split is announced, running up into the split itself, the split event, you will have a bullish rally. We saw that with Tesla in August of 2020. After the split event, and sometimes it's the day of, sometimes it's, a week or two before, sometimes usually it's the last 2 or 3 days before the event itself. Can't seem to get squared up here on the camera. Sorry about that. In the case of Tesla here, it was basically the next day. Okay, so you had a bullish run all the way up into the event, and then it stops. And then more often than not, following the split event, you have something that looks like this right here. Now, for some people, they would call that a crash. It's because this is the internet age. This is the age of crypto and everything else. And people refer to any kind of a selling as a crash. But if you look at the chart, does that look like a crash to you? No, it's not a crash. What that is it's a consolidation. It's a consolidation of trading behavior. Okay, so why am I making such a big deal about this? Because I want to show you where it went from there. Okay, so there's kind of three phases typically, not always, but typically three phases of the stock split. Phase one, after the announcement, running into the split itself, we have the rally phase. Okay, phase two, we have the consolidation phase. And then in phase three, the trend continues more often than not. Now, this is historically done with companies that have really great, they're really great companies. They continue to grow, they continue to attract new investors, and yada, yada, yada. That is the typical movement that you see. Let's go back over to GameStop. What you're going to notice with GameStop is GameStop has followed, let's rescale that one. GameStop has followed this pattern, sort of. Okay, if I zoom in on GameStop, what you're going to see is leading into the split event, which is coming up tonight and tomorrow, we have had the rally. Okay, now it's not been a huge rally, but it's been a sizable rally. I mean, it's been from $130 a share, $120 a share, up to $150, $160. So it's not bad. Certainly not a bad rally. Timing-wise, it's been a couple of weeks. That's fairly normal for a stock split event, which means following the split, what you would expect is you would expect to have some sort of a consolidation and then hopefully a rally or a trend continuation. Okay? That's what we would expect to see moving forward. Now, everybody who's traded stock splits before knows that that's what you should see moving forward. Here's the challenge and kind of my yellow flag about GameStop. I would not put GameStop in my top 10 list of best performing stocks. Has it done well? It has done well, mostly because of the hype that has been surrounding it. It's not like GameStop is a revolutionary company that is innovating in ways that only Nikola Tesla could invent. So I don't really love that aspect of the company, but that's really aside, because if you know anything about the way that I trade the market, I don't really care what the fundamentals say. I don't care if it makes sense or not. What I care about is if the trading behavior is there, if the volume is coming in, and if people are buying it. If people are buying it, then who cares what the fundamentals say? It really doesn't matter. So with that in mind, let's take a look over here and let's see what the behavior has been for GameStop. And what I wanted to draw your attention to, and I really found it interesting, I find it interesting, that GameStop is splitting. I don't think GameStop can justify the split. That's my personal opinion. All right, but after all the hoopla that happened in early 2021, okay, this is where that hoopla all happened. We saw all that crazy volatility come flooding in. Notice what has happened since then. What's happened since then is not a normal bullish trending behavior, but rather it is a series, try to scale this a little different here. So much volatility, it's hard to get it all in the chart. It is a series of volatile runs followed by kind of a consolidation, oozing. It's not even a normal pattern of any sort, really. And then we have that big run, and then we kind of have that fizzle. And then we have a smaller run and a fizzle and a smaller run. And then we kind of got into this whole end of the year 2022 crash. So yes, I'll give it to you. If you're a GameStop lover, I'll give it to you that it's hard to say exactly if GameStop has sold off from the end of the year. You know, we were at 240. The bottom we had here in March was 80. It's hard to say if we went from 240 to 80 because of trading behavior or because of, general sentiment of the bear market of 2022. I'm going to say it's a little bit of both. What's interesting, if you look at this chart, is once we kind of got through some of that initial selling for the first 3 or 4 months there, we had another surge, and then the selling returned. And now we've really been in what we call a consolidation already. So here's my overall concern, and I'm just going to be really candid with you on this. this whole pattern, basically the last 2 years, has been an extremely volatile consolidation move on GameStop. That's what it is, the whole move. What does that mean for the future? Well, I can guarantee you tomorrow when the market opens up, the price of GameStop is going to be, $35, $38, $40 a share. I can guarantee that because that's the post-split price. That's what it's going to be. So don't freak out whenever you see that. The future of GameStop, I think, is a little bit in jeopardy here. And I know a lot of you really love the stock, so I'm not trying to hate on it, but I'm just giving you my opinion on this. I think that the hype that has driven this for the last 2 years is the only reason they're doing a stock split. And unfortunately, there's a lot of people, many who really don't understand much about trading, who are buying GameStop simply because they're excited that there's going to be a stock split. And they're looking at this and they're saying, oh, it's going to do the same thing that Tesla's done. Because if you go back to Tesla, let's do that really fast here. If we go back to what Tesla's done after their split, where was their split? So their split was way back here. It was at $2,500 a share. And from that $2,500 a share, it cut down to $500. It dipped down to $300 or so, rallied big to $900, pulled back, rallied big to $1,250. It's pulled back. And we're kind of building some support in there at $1,250. In fact, probably should do another video, but there's actually a potential buying opportunity for Tesla right now. That's a side note. My point in doing this is to show you that post-split, Tesla continued the trend. But here's what you got to understand about Tesla. Tesla was already in a bullish trend. You can come back and look at the history of Tesla, and you can see that Tesla has been in a bullish trend forever. And it was in a huge bullish trend running into the stock split. Normally, most of the time when we see a stock split, that's what we see. We already see a stock that's already trending, and we split, and the trend, after it consolidates, the trend continues. With GameStop, we do not have that pattern. So with GameStop, what we see is we see a stock that had a bunch of hype. And that's it. If I take this full screen here for you, all we have is all this hype, and these are the little hype moments when Wall Street Bets or whatever internet group has been pumping the stock. And look, I really don't have a problem with that because the truth is, hedge funds have manipulated this stuff for years. So I fall on the side of Wall Street Bets and the traders. But when I look at this, I have a lot of concerns because I do not see a bullish trend that needed to be split, but rather I see kind of some crazy trading behavior. One of my rules is you don't trade crazy trading behavior. Another thing I'm going to do on here, and I realize that, if you're watching this on YouTube, you probably don't know me that well. But I just snapped a line in here for a pivot area, and notice, in fact, I'll snap a couple more. This is how I trade. This is how I teach people to trade. Notice what's happened with GameStop. We actually consolidated in this range, and in 2022, we dropped to this lower range where we've been trading, and we're just now pounding into that resistance. That's not really the time you want to split. It's really not. So look, I hope the best for GameStop. I hope the best for everybody who's trading it. Will we have some volatility that we can trade? Probably. That has been the pattern with GameStop. And so from that standpoint, I think there's a really good opportunity here. Do I think it's a long-term investment? Probably not. Probably the future of GameStop is to eventually fizzle and fazzle, and eventually all the buzz will leave from it, I would think. But you know what? I've been trading for 22 years, 23 years, and I've seen a lot of stocks that have just kept a lot of buzz and hype, and they really didn't justify it, but people kept buying it, people kept trading it. And as long as people keep doing that, there's going to be an opportunity here. So I hope this has been helpful for you. I hope you learned a lot about stock splits and why stocks split. And actually, I didn't talk about that. Why do stocks split? Well, normally companies split the shares to make them more affordable. That's the biggest reason people split their shares. And another reason is to calm down the volatility. So that kind of gets into another phase here, but that's really regardless at this point. None of that really matters. The thing that you care about is what's the future for GameStop. And if you opened up your account or you just pulled up the chart and you're like, oh my gosh, why is it fourth the price? Well, now you know. Now you have the answer, and you're going to see your charts looking a whole lot different next time you look at it. All right, if you found this helpful, then please, by all means, subscribe here to the YouTube channel and check out what we're doing over at TradeMaestro.com. Here, I'll put that back up here on the video for you. TradeMaestro.com. We've got all sorts of training to help you maximize your trading returns, help you understand what's really going on in the market. Look, guys, trading the market doesn't have to be hard, doesn't have to be complicated. It can be very straightforward and simple, but you got to have a system. You need to know what you're doing, and that's what we teach people to do over at Trade Maestro. So check us out over at TradeMaestro.com. And like I say, subscribe here on the YouTube channel. We're always releasing new stuff, and sometimes we do challenges, and we do market updates and all sorts of stuff. So it's all right here for you. So get yourself subscribed right here, and I hope this has been helpful for you. Until next time, happy trading to all of you. We'll talk to you soon.